This week on the Retirement Quick Tips podcast, I'm recapping the stock market, bond market, the economic climate in 2024, and then we're looking ahead to 2025. And today, I'm talking about the economy. So I want to do a deeper dive on what was driving the economy and the growth that we saw last year, as well as looking ahead to the year ahead. The U.S. economy looks poised for continued growth in 2025. The economy grew in 2024, and there were a lot of trends from 2024 that appear like they're on the path to continue. So we had a growing economy. We had an uptick in the unemployment rate, but the employment and labor market is still relatively pretty stable. Yeah, there's been some layoffs here and there. Unemployment has gone up, but it is still low by historical norms. And now that the Fed has stopped raising interest rates and they've started cutting interest rates, that's a good indicator that the unemployment situation is likely to remain stable. Along with that, we also had declining interest rates. So the Fed, I believe the Fed cut rates 3 times, if my memory serves, for a total of 1 percentage point. So I believe there was a rate cut of 0.5% and then 2.25% each. Correct me if I'm wrong, but that's my caffeinated memory trying to pull that up in my brain. Okay, so we had declining interest rates, which helped the economy grow. And then we had increasing corporate profits. Now, a lot of these things are intertwined. The interest rate environment really influences a lot of these other areas: employment, the economic growth, corporate profits, etc. Looking ahead to 2025, with the new administration, we also have the likelihood of the extension of the Tax Cuts and Jobs Act, and that could further drive economic growth. And on top of that, in light of the election and Trump 2.0 administration, there's this idea that is, I think, well-founded that Trump will bring deregulation, lower taxes, friendly business climate. And so you're already seeing an uptick in merger and acquisition activity. Okay, so along with that, though, there are still risks. And I think, to me, one of the biggest risks for the economy and the markets in 2025 is going to be inflation. So a big driver of inflation is interest rates. And the Fed has this balancing act. They're on a balance beam and they're trying to not fall off. And they have to keep their dual mandate: low inflation and a strong labor market. And that's tricky to do. So they aggressively raised interest rates, and that sent stocks and bonds into a tailspin in 2022. But it cut inflation, which at one point, it was up to 9 or 10%. And in certain areas like rents and housing, it was just, I don't need to go into the details. You remember, it was painful. But they had to squash inflation, and they waited too long to start raising interest rates. Then they had to overcorrect. And now, even though inflation is still stubbornly higher than their target, it has obviously come down significantly to a more reasonable level, not so much sticker shock when you go to fill up your gas tank, go to the grocery store. The problem is with inflation, though, is that these prices, they're now baked in. They're not going to go back down to what they were in 2019, 2020, before then. The higher prices, unfortunately, are here to stay. So that's true for housing. It's true for food. Energy and gas, what you pay at the gas pump, that's a lot more volatile, what you pay to fill up your car. But in general, the inflation is here to stay. And part of the problem there is you can thank the Fed for waiting too long, and they let inflation get out of control before they did anything about it. And then they had to overcorrect. But over the last year and a half or so now, they've been lowering interest rates, and they've been very careful about doing that because they don't want to reignite inflation. And so far, it's working. It is still a risk, though, because inflation, they've cut rates, but inflation is still sticking around and it's not at their target. So the Fed is targeting 2.5% rate of inflation. And time will tell if the Fed has gone too far in their easing policy, they cut rates too much or too soon. Or we also have expected tariffs. We also have immigration changes that could also reignite inflation. And we saw these worries play out in the last month or so because the stock market did incredibly well following the election. And investors were really hopeful, like I said, that we were going to have deregulation, lower taxes, friendly business climate. But then stocks ended on a weak note because reality set in. There's a lot of uncertainty about policy. This inflationary pressure that looks like it might come from tariffs. Although we don't know how that's going to play out and how long that's going to take to work its way into the system and how broad-based it's going to be. So if you're worried about tariffs, I would hold off on the worry too much, because what is said on the campaign trail and the rhetoric, especially from Donald Trump, is very different than what actually gets implemented or what ends up being done. And then you also have the likely deportation of the undocumented immigrants. That could raise labor costs. But again, we don't know the scale and what can be done. I don't have enough of a political understanding of how they would practically do that anyways. So there are certainly risks, but I think a lot of these trends from 2024, strong economy, stable employment, declining interest rates, increasing corporate profits, all of those look poised to continue into 2025. I'm relatively optimistic heading into the year, but there is some policy uncertainty. And certainly outside the United States too, there's geopolitical risk. We have multiple wars going on around the world. So there is a risk that the economy could experience slower growth, inflation could rise again. I think those are some of the primary risks on the horizon for 2025 that I would be watching closely or be somewhat concerned about. All right, that's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.